Softer dollar may be stock silver lining amid Washington drama. Welcome to the Shakaama Live Show with your host, Shakaama. With S&P 500 companies set to notch their strongest quarterly earnings growth in about 6 years, a weaker U.S. dollar may help keep the profit momentum rolling and support share prices in the weeks to come. After a dramatic week in Washington that rattled financial markets, one possible silver lining for stock investors was the weaker dollar, which can support earnings of U.S. multinational companies with large foreign operations. The dollar weakened by 0.5% against a basket of currencies on Wednesday following reports that U.S. President Donald Trump tried to interfere with an investigation into his former national security advisor's ties with Russia, revelations that also sparked the S&P 500's biggest one-day drop in 8 months. The currency was on track for its biggest weekly percentage drop in a year, and so far in 2017 the dollar has pulled back 5%, having erased its post-U.S. elections gains. Movements in the dollar can be significant for U.S.-based multinational companies. The stronger the greenback is against other currencies, the less valuable foreign sales become when they are translated back into the U.S. currency for reporting purposes. Quote, a weaker dollar is arguably good for any company that sells overseas, said Alan Gale, Director of Asset Allocation at Ridgeworth Investment in Atlanta. If you're talking about a silver lining, if you're a large cap company that has significant overseas sales exposure, then this is emergent positive. First quarter results for U.S. companies have bolstered confidence in equities, with the market reaching record highs earlier this month, even as events in Washington threatened Trump's promises of tax cuts, infrastructure spending, and reduced regulations that had helped fuel a rally in stocks. With more than 90% of the S&P 500 having reported first quarter profits, are on pace to rise by 15.2%, according to Thomson Reuters. Second quarter earnings are expected to rise by 8.5%, a figure that could swell depending on currency movements. The dollar has fallen 3.2% during the second quarter alone. Companies with significant global operations have already shown strength as the dollar has weakened in the first quarter. S&P 500 companies with more than half their revenue from outside the United States have reported a 13.2% increase in earnings when excluding the energy sector. That compares with 10.6% increase for companies with half or more of revenues coming domestically. Energy sector results are skewing overall S&P 500 earnings because of year-ago negative results. The S&P 500 has claimed 6.5% this year, while the Russell 2000, the benchmark for small-cap stocks that tend to be more domestically focused, has climbed only 1%. The weaker dollar could be a pretty strong tailwind, said David Schleichert, Managing Director of Investment at U.S. Bank Private Client Reserve. Quote, the companies that garner most of their revenue from overseas sources, that could be a momentum play if you continue to sell a soft dollar. According to currency risk consulting firms FireApps, which tracks corporate commentary on currency effects, the impact of currency moves on U.S. companies in the first quarter has been similar to that in the prior 2 quarters. But the firm cautioned that the first quarter is historically a period with reduced currency impacts and noted the weaker dollar has created potential for an increase in international earnings. Ed Yardeni, president of consulting firm Yardeni Research Incorporated, questioned whether the dollar's fluctuation will significantly increase profits, citing his firm's analysis showing minimal overall negative impact from the currency's strength in recent years. Quote, in theory, it should be a positive, Yardeni said. But as a practical matter, looking at the past 2 years, it didn't really show up as a major drag on earnings, so I'm not sure it's going to suddenly be a major boost to earnings as it reverses itself. The dollar also remained generally above levels where it was during the second quarter of 2016, even as it had softened this year. Peter Anderson, Chief Investment Officer of Fiduciary Trust Company in Boston, worries over what the weakened dollar reflects about global attitudes on the U.S. economy health. Quote, I tend to think when the dollar trade-off that it's more of a sentiment reading, Anderson said. So that has more concern to me than the positive byproduct of foreign currency translations giving a boost on earnings. For those of you not in the know, a weaker dollar is bad domestically, which means a bad economy stateside. This only benefits very large cap companies who trade overseas. Domestically, that's stateside, that is within the United States, a weak dollar is horrible. It's horrible for Main Street. It's horrible for mom and pop stores. It's horrible for people who trade stocks on small cap firms which are domestically traded. If you want the economy to be boosted, you want a strong dollar. The stronger, the better. The stronger, the better. Also, with a strong dollar, you can raise interest rates and not suffer a huge crash in the American economy. Thank you for watching the Shakaama Live Show. Please consider donating to Shakaama at patreon.com/Shakaama so I can continue to report on youtube.com. Thank you.